Okay, welcome back, ladies and gentlemen. Today we've got a really special session for you. We have got the king of Bitcoin, Andreas Antonopoulos. So he's a Bitcoin and a blockchain expert. Andreas has been interviewed by Bloomberg, CNN, CNBC, CBS, NBC, ABC, BBC, literally all the A's, all the B's, all the C's, Financial Times. Pretty much everybody has interviewed Andreas. He is the go-to guy for Bitcoin, for crypto. He's written several best-selling books on the topic as well, including The Internet of Money and Mastering Bitcoin, Programming the Open Blockchain. Andreas is also a keynote speaker who speaks at conferences all over the world. I could go on, but to sum it up, Andreas is basically the king of Bitcoin. So welcome to the show, Andreas. People are really looking forward to this.
Thank you so much. I will object, of course, to the title of king, because the very premise of Bitcoin is we beheaded our kings and we did not appoint new ones to replace them. Bitcoin is, by definition, a leaderless system. And so I can be the teacher of Bitcoin, and that's as much of a title as I need.
All right, that's great. Well, it's great to have you on the show anyway. Okay, so I'm gonna get into some questions now then that have been coming in. All right, so number one, I think let's start with the basics, Andreas, because some people, a lot of people actually who subscribe, they don't know what Bitcoin is. Like, they have an idea. And I would say, just being honest with you, because I want you to resolve this, I would say 80%, maybe 90% of people who comment on my channel say, Bitcoin is a massive scam, a massive Ponzi scheme. So I really want you to just set the record straight on this today. So let's start with the basics. Let's start with what is Bitcoin?
Yeah, so the basic thing is Bitcoin is a protocol. It's a standard. It's a communications protocol and a system that operates using that protocol. And most importantly, it's an open systems standard. Very much like email or the World Wide Web, which are other internet standards that people know about. So there's no company that owns email or the web, although many companies have a presence on the web or use email or provide services using email or to email users. No one owns it. Well, the same thing with Bitcoin. There is no Bitcoin company. No one owns Bitcoin. And it is an open system in which many companies participate. They can use Bitcoin. They promote services on Bitcoin. But ultimately, the system runs on a set of rules that operate as an internet protocol. It's a very distributed system, which means that all of the participants have a small amount of power to follow the rules and check each other and audit each other. And they don't have to trust each other. And that's a critical aspect of this system, but no one actually owns or runs it. And so what that does is it creates a global form of money and a global payment system and a network that can be trusted even when the participants themselves don't trust each other. So that's what Bitcoin is. And of course, you know, I understand a lot of people are very skeptical because all forms of money and payment systems they've seen in the past arise from some central authority. And that central authority dictates the rules, controls the security, etc. Just like in the past, all news came from a few trusted sources rather than anyone on the internet. And all media and entertainment came from a few trusted sources. Well, the internet changed that, and now it's changed money too. And finally, in order to have a Ponzi scheme, you need two things. First of all, a scheme, which somehow makes some people have greater power than others. And you kind of need a Ponzi. You know, Ponzi was the name of the person at the top of that scheme, who was really converting new investors into gains for old investors. That doesn't really exist in Bitcoin.
Yeah, actually, I was watching an interview of you where you were speaking about some of the Ponzi's that had been developed, and you were saying it's not actually Bitcoin itself, it's not actually the blockchain, it's that there's other platforms that's open source and people develop, I'm probably paraphrasing here, but you can put it in your own words, but people develop sort of a Ponzi scheme from from this software. Can you elaborate on that a little bit?
I mean, Bitcoin is money, and it's money with a lot more flexibility and fluidity than traditional forms of money. It doesn't have gatekeepers. It doesn't have controlling agents, because its intent is to open access to money as a system or as an internet service to everyone on the planet who can load the software. As a result, you have to take a lot of personal responsibility, just like you would when you're handling cash. So if you leave a suitcase of cash lying around at the bus stop, no one is going to recover that for you. If you keep it under your mattress and it gets stolen, no one's going to give that back to you. And if someone comes to your door and tells you a story about a Nigerian prince, and you end up giving them all of your cash, no one can reverse that transaction and fix that for you. And of course, that's attractive to scammers, because the traditional financial system trains people that other people will take care of the security and can reverse any mistakes they make. That transfers. So people assume there's someone they can appeal to, call for tech support, ask someone to block or reverse a transaction. But of course, that level of protection comes with a very heavy price. And what that price is that in the traditional financial system, the people we entrust with that level of protection both exploit it to enrich and empower themselves, and they also keep a number of billions of people outside of the financial system because they're not worth the risk. And Bitcoin changes all of that, but with that, it brings risks. You have to be responsible. So scammers are attracted to it. You have ultimate responsibility for your money as if it's cash, because it is cash, only even more fluid because it can be transmitted over the internet. And as a result, it's a system that gives you enormous power, and with that power comes responsibility.
Yeah. Hey, it's interesting you just mentioned it being money. You said money, you said cash. Let's talk about that, if you don't mind, getting a little bit deeper on that.
Sure.
What would you say makes it different from, some people say it's a currency, some people say it's money, some people say it's cash. What would you classify it as if we look at the sort of, the requirements of money, as it were? Because one of the things, if you look up, say, durability, is Bitcoin durable? This is one thing that I was thinking about when I was reading bitcoin.org, and they were saying it's durable. And I thought, in semantics, durable is more of a physical thing. So that was the only sort of, can we talk about that? And what do you think? Is it cash? Is it currency? Is it money? What would you say it is?
It's cryptocurrency. And with that new category, you have to start looking at how you understand the criteria within the same category. This is a bit like, the birth of the automobile, and you're trying to figure out, is it a horse or a train? Or is it more like a cruise liner? Well, it's none of those things. It's a new thing. And we need to reevaluate the rules and understanding and how we measure things within this new context, because it has certain characteristics that make it more similar to gold. It has other characteristics that make it more similar to a stock. It has other characteristics that make it similar to cash. It has characteristics that make it similar to a bank payment system. So it shares characteristics with all of these things, but it also has unique characteristics that don't fit in any of the traditional buckets. And so attempting to take one of the 10 pigeonholes of asset types you have and kind of shove it in there and see if it fits doesn't really work. Just like at some point we had to create a new category called derivatives to describe financial instruments that did not fit into the traditional categories, we now have a new asset class called cryptocurrencies, which don't fit into traditional currencies. In terms of durability, if you take durability and you detach it from its physical components, you have to reconsider what that word means. Because I don't think anyone would claim that US dollars are not durable simply because 92% of US dollars are held entirely in digital form and do not exist as physical cash. Does that mean that US dollars are not durable? I don't think so. So with Bitcoin, in fact, durability is a characteristic that's taken to a whole other extreme, because as long as there is one copy of the ledger that is continuously synchronized on tens of thousands of computers all around the world, that Bitcoin is durable. And it's proven to be extremely resilient and durable, more than any other form of money we've seen in the past. If I would take any one of the criteria in Bitcoin and put a question mark next to it, it would be fungibility. Fungibility is one of Bitcoin's weak points at the moment, because Bitcoin operates on a transparent ledger, and it is possible to trace the history of any one of the currencies. That can create some issues with fungibility. And of course, we're working on improving Bitcoin's privacy layer in order to improve its fungibility. But in terms of the other characteristics of money, in most of the cases, it takes the existing mechanisms of money that we have and brings those characteristics to a whole other level.
Would you say that's Bitcoin or all of the cryptocurrencies?
Well, no. I would say that each cryptocurrency needs to be evaluated on its own merits, especially because this space has undergone a lot of fragmentation. And this fragmentation is natural at this point in the technology, as people pursue and explore different niches and different variations on the basic theme. Think of Bitcoin as the original recipe, and people are making all kinds of variations of that recipe. Not all of them will have the same characteristics. Some do. Some attempt to achieve other characteristics. Let's go back to the example I just mentioned, fungibility. There are other privacy-focused cryptocurrencies that have far superior fungibility to Bitcoin. But in many cases, they don't have some of the other characteristics as strongly as Bitcoin. So we need to think critically on every cryptocurrency and do the appropriate analysis to see what characteristics it actually has.
Okay, yeah, that makes perfect sense. That's great. So the next question that's been coming in quite a lot is, do you consider Bitcoin to be an investment? And let's look at this in two ways, really. We have, active investments, we have passive investments, or we could say it differently. It's an investment that doesn't make a monthly dividend or a monthly income. Let's take real estate. Real estate is an asset. If you rent it out, you make a monthly income. You look at, say, gold, and that's more of a store of value in my mind. So this is just my definition. So what would you say about Bitcoin in terms of being an investment?
First of all, to clarify, I'm a computer scientist, so my understanding of investment is not one based on my training. It's based on my own experience as an investor, and really carries little weight. But in terms of understanding how the technology reflects itself in these characteristics, I want to ask you another question. Would you consider cash an investment?
I wouldn't. I'd consider it more of a liability.
Okay. And it forms, and presumably gold would kind of fall somewhere between cash and other forms of investment. It has some sort of value characteristics. It doesn't deliver any dividends. It doesn't work for you. It's no passive income generator. And I would say the same thing applies to Bitcoin. It has certain characteristics that make it akin to gold, in that it is a long-term scarce resource that cannot be replenished, which has an incredible inelasticity of supply. But it also has some very powerful characteristics that gold doesn't have, in that it can be divided down 8 decimal points cleanly, and it can be verified in its authenticity very easily and not easily fabricated, which is important given just the most recent news from this week of gilded copper bars for 83 tons of gold in China. But, obviously, if you're an investor, that's a story you hear every couple of years when it comes to gold. But at the same time, if you compare it to holding cash in your portfolio, for example, at times when there is a risk in the market and you want to go to a safe haven investment, a lot of people allocate cash. Right now, I think in the US, cash allocations are at an all-time high. So how would you use Bitcoin in that case? I would say Bitcoin is a mechanism that resembles cash in its safe haven characteristics in some ways. At the same time, it delivers much more volatility, which can either lead to capital gains or capital losses. So you can use it to spice up the risk component of your portfolio if you want, as a diversification strategy, as part of a cash strategy. You can use it to spice up your gold portfolio, again, as a store of value. And it's a bit speculative because it's more volatile and because there's a lot more uncertainty long-term with the technology. So here's the advice I give people.
Go ahead, yeah.
If your portfolio is a gumbo, Bitcoin is cayenne pepper, and a little bit can make it much more interesting and flavorful and bring out some excitement in your portfolio, and a lot of it will make it completely inedible and ruin your portfolio strategy. So that's how you would use it, right?
Yeah, and that's interesting because that's exactly the same way that I look at it. I see it when people say it's an investment, it's an investment. I look at, I already gave the example of how I see investments. So in my mind, I see Bitcoin more like gold, except Bitcoin is digital, gold is physical. And for me, it's very difficult to steal Bitcoin, but it's doable. It's been done. At the same time, gold can be stolen. If you hide it in your house and someone breaks in, it can be stolen.
Especially by the government.
Yeah. I mean, it happened in the past, not too long ago. And people ask me a lot of times, do you think it will happen again in the future? And the answer is, yeah, it could happen again in the future.
Will gold get confiscated? Only if it poses a threat by actually doing its job, which is providing a safe haven from cash, forcing people or encouraging people to exit from cash positions, which is going to cause problems with the banks. So yes, of course, gold is ignored as long as it's not necessary. And when it's necessary, when you need it the most, that's when the attention of government turns suddenly towards it and you become an evil speculator. Here's the bottom line. We're still talking about Bitcoin. Now, the same question of, is it an investment, I would answer differently if we were talking about some of the other systems out there. So there is a broader space called decentralized finance that involves the tokenization of assets, of equity, and of various other things through digital representation as blockchain-based tokens. Now, in that case, we actually have assets that involve lending, mostly collateralized lending rather than unsecured lending, and various savings mechanisms that exist within that convert these tokenized assets through collateralization and lending into passive income generating investments. So in the broader cryptocurrency space, there are things that are much more like investments, and there's also a big opportunity and a big risk for opening up the availability of investments as well as the availability of startup capital to an international audience. Right now, you can't invest in a startup company unless you're an accredited investor and mostly within a few jurisdictions. And if you're a startup, you can't access capital unless under very stringent requirements and in very small and limited jurisdictions. One of the things that tokenization of securities has done is opened up effectively the possibility of startup investment to an international audience and to an international pool of startups. And that fills the gap between very early stage angel investment and kind of the Series A and public IPO level of investment. Now, this is now a wild west of unregulated investment in which there are millions of scams. Okay, maybe not millions, but tens of thousands of scams. And a lot of it's very dodgy. That doesn't mean it's all dodgy. And it doesn't mean the underlying idea of opening the pool of investors and the pool of startups isn't going to change the face of finance. So when we talk about investments, there's a broader space to consider, and not everything is just the same as Bitcoin.
Yeah. That brings us on to a good point, actually. A lot of times people ask me, and I'll give you my answer to this question, and I want you to tell me, is this the correct answer or correct it? based on your experience. So they asked me, why does Bitcoin, you remember the recent case when Bitcoin just went through the roof and then it just dropped right down. So I actually own one Bitcoin. I've owned it since the start. I think, I think I got it for $20 or something like that. It was like for nothing. And that now is worth thousands. But I remember it went right up and then it just crashed to half the value. And people were saying, why did it crash? And there's all these different reasons. So my theory is, if you think of, say, the silver market, why does silver triple in a recession and just goes up sky high? And then as you come out of the recession, as the money starts to move back to stocks, real estate, and starts coming back down again, the silver market is very small. So it's very easy to have these huge fluctuations. Would you say that's the same reason for Bitcoin, or is it a different reason?
Well, I think you got one part of it absolutely right, and that's the size of the market. And in fact, if you look at long-term statistics and you compare the trading volume, market capitalization, and volatility, the bigger these things get, the more stable they become. I use a visual analogy to help people understand it. If you think of the U.S. economy, 100-some trillion dollars, it's like a super tanker moving at 3 miles an hour. Doesn't matter what the waves are doing. It takes 2 hours to turn 90 degrees, but still doesn't matter. Just plods along. Very, very stable platform, right? And Bitcoin, by comparison, instead of displacing 180,000 metric tons of water, is a little zodiac boat that's bouncing up and down on the waves. It displaces more economic activity. It has heft. It takes bigger amounts to move it, to move the price in the markets, and as a result, it becomes more and more stable. Bitcoin is still very small. All of the cryptocurrencies are still very small, which means that at the whim of a few investors getting excited about something, exciting things happen to the price. That's one aspect. The other aspect has to do with another very important phenomenon that exists in the silver market but didn't exist up to 2017, December of 2017 specifically. And that is that until then, cash settled futures markets did not exist, meaning that if you had supply restriction, which you do in scarcity because of Bitcoin's monetary policy, and at the same time you have some exuberance, some market frothiness or whatever, the excitement driving buyers is not tempered at all by sellers, because in order to be a seller in that cash market, you have to have Bitcoin to sell. And if you don't have Bitcoin to sell, you can't short sell. You can't do a naked short into that market, or at least you couldn't. In fact, we now know that the US Treasury fast-tracked the approval of cash-settled futures, which had the ability to do naked shorts, on December 6th of 2017, right as the bubble peaked. And those futures then put a really sudden lid on that exuberance. Yeah. Bitcoin has been a lot less volatile since. And one of the reasons it's been a lot less volatile is that when you have very excited buyers, you also have skeptical sellers who put a check on those on that exuberance with naked shorts. And that, I think, has probably created a more tame market. I don't know if it's good from an economic perspective or not, but that's my interpretation of why you see these kind of roller coaster moves. A market that only has buyers, no sellers, lots of exuberance, limited supply, and small market cap. Things can get very, very wild.
Thank you for that. Next question is, do you think Bitcoin will ever become a major currency? You said on an interview that Bitcoin is not looking to replace national currencies, but to supplement them. Can you talk a little more about that, and also in some of the developing nations as well?
Yeah, so Bitcoin represents the breaking of national monopolies over currencies, just like budget airlines represented the breaking of the national flag airlines in the 1970s. And the idea that every country has one currency and that's the one you use whether you like it or not died on January 3rd, 2009. And we've now entered a new era. In most of the developed worlds, this doesn't really have an impact and doesn't mean much until we have applications for cryptocurrencies that you simply can't do with national currencies. And of course we will, because modern digital currencies can do amazing things that traditional currencies simply can't. But in the developing world already, where there are national currencies that are going through a crisis, Bitcoin is already providing an exit. It's providing a safe haven, a lifeboat experience, if you like, for people who have the technical means and infrastructure to do it. So it's operating in that way. It's also operating in areas where traditional finance has very, very high barriers to entry or very high friction. Cross-border transactions such as bank wire transfers are a prime example. If you're running an import-export business, if you run payroll with lots of contractors around the world, especially for a small business, it's a game changer to be able to pay your people in a matter of minutes with Bitcoin. I do that myself. Bank wire transfers are a nightmare. And have always been and will always be. So there are particular areas, niches, where it fits very well. As to whether it's going to be a major, large currency, I think Bitcoin has already started establishing itself and will continue to establish itself as the native currency of the internet. And then if you believe that the internet will continue to become a more and more important part of the global economy, then its native currency, by definition, will make the most sense. When you're on the internet, national currencies don't make sense. The internet is open, it's borderless, it's neutral, it's transparent, it's fast, and it's purely digital. And so a currency that is open, borderless, neutral, transparent, fast, and much more secure than credit cards is going to be a much more natural fit for doing e-commerce, for doing all kinds of other things, including, very interestingly in my mind, machine-to-machine payments and micropayments that simply can't be done with traditional payment systems. So yes, Bitcoin will be a major currency. It just won't be a major national currency. It won't be a major geographic currency because nationality and geography have been rendered irrelevant in the domain of money. And I think that's the really important thing to grasp here. It is an inflection point that changes history. Just like the internet changed that for communications, for media, for news, for employment, it's now changing it for money.
Yeah, I completely agree with you. There wasn't a thing there I didn't agree with. So that mirrors a lot of what I say anyway on it, which is great. See, when I look at it as a currency, some people say, and it makes me laugh, oh, one day it will rival the US dollar because the dollar will collapse eventually and Bitcoin will take its place. And when I hear that, I think, personally, I don't think that would ever happen. And you may think differently to that, but I can't see it ever happening. I've always thought, yes, it will become an online currency. It could become the currency of the internet. But is the Fed or someone like that, or, let's say the US or any major nation with a huge military and everything else, are they ever going to allow a currency, a cryptocurrency, to, do everything it does without that control? Because, you look at this crisis. What's the Fed done? It's dropped the interest rates, which were already almost zero, to zero. They've run out of ammunition. They can't really do a lot more. So they're quantitative easing. Quantitative easing, put in money, or as they like to call it, large-scale asset purchases. They don't like quantitative easing, right? They're pumping all this money in. And people say, well, in the last crisis, it didn't actually affect a lot. It didn't affect inflation. And that's true to an extent. But when you're printing trillions and trillions, and, it could go on for however many levels of trillions, that has to do something. You can't steal from the present, right?
It does. What it does is it massively reduces economic inequality. It creates massive economic inequality, which eats at the very basis of the social compact of society, of the norms and institutions of democratic society. And we have seen that very strongly since 2008. The rise of the billionaire class with the political clout that they have was last seen during the Gilded Age of the late 19th century, and we're seeing a repeat of that, and that brought a lot of social change with it, including threatened to collapse a number of currencies around the world. The British pound sterling is a perfect example of how that changed in the 19th century. Now, in the broader sense, of course, the Fed isn't going to simply give up their power. And if they give it up, they're not going to give it up for cryptocurrency. If something's going to replace the dollar, my first bet would be some form, some variant of an SDR, special drawing rights, an IMF basket currency synthetic that they kind of rush into production in order to forestall the collapse of the international forex trading systems, which are all dollar denominated. And it will be some kind of, yen, yuan, ruble, dollar synthetic. Regardless, that's an economics discussion. It won't be Bitcoin. That doesn't matter. The question isn't what the Fed will do with its own choices in currency or what any national government will do. The question is, what do individuals do? Do individuals make these choices at first timidly and in a limited way, and then more and more courageously and profitably as they find that the native currency of the internet becomes the native currency of their job, because their job is natively on the internet, becomes the native currency of communications and socialization and media. And if that happens, that has a tsunami effect. Now, if you step back and you say, well, what is the Fed going to do about it? They can never allow this shouldn't exist. Well, the basic problem is that it does exist, and there's not much they can do about it. And this is another point that people have a lot of difficulty grasping. The form of currency that is purely digital, that is Bitcoin, unlike other digital currencies that exist, is a self-verifying bearer instrument, meaning that if you look at the code of a Bitcoin transaction, you can verify that that transaction is correct on your own without asking anybody, an external database. If you receive a block, you can verify that it's part of the Bitcoin blockchain without asking anybody else. That aspect of it turns Bitcoin into something really interesting. Not only is it bearer instrument, not only is it purely digital, not only is it self-referential, it is effectively money as a pure form of communication. It's money as data, money as information, without any external references. How do you stop money as information? Well, I can write it down as a series of emojis and send it through a Skype conversation. I can graffiti it onto a wall. I can do a transaction that I post on Craigslist as a series of English words that appear to be a recipe for chicken. And unless you are willing to stop all communication that appears to not be something you can immediately identify on all media at all times across the entire planet, there is no practical way to stop methods of money that are pure information. The idea behind Bitcoin is math. The recipe itself is so easy to replicate that with this book and a weekend, you could build your own if you're an accomplished programmer. Not you, a 15-year-old could do it. And maybe it wouldn't be as good. With a bit of tweaking, it would be better. And so this is the bottom line. You can't stop an idea, you can't stop pure math, and you can't stop money as information. What the Fed will try to do is it will try to recruit popular sentiment against Bitcoin. They will blame the financial crisis on Bitcoin, just like, today the Bank of Zimbabwe blames the collapse of their economy on foreign speculators and mobile money platforms and stock market speculators and mysterious forces. That's always what happens in a failing system. They will say that only criminals use it, even though we all know that we're not criminals and we use it. They will say that its only purposes are nefarious. And when they start saying that, they're going to create some cognitive dissonance among the people who see it as a lifeboat. So this is an inevitable outcome. If Bitcoin is successful, it will receive a backlash. And that backlash will be couched in protecting the things that we cherish the most. Family, country, the future of the dollar, et cetera, et cetera. But it's all bullshit propaganda. At the bottom, at the bottom of all of this is a simple invention that allows people to use the internet to send and receive money. And if you are terrified of your own citizens having some degree of autonomy, having the same privacy that we've had for thousands of years with cash, having the ability to engage commercially with others, that doesn't say anything about the internet, your citizens, or Bitcoin, but it does say a lot about your perspective of government and what its relationship to people should be, and that's not a good story.
Yeah, great. It's funny you should say that, because I was thinking, what will they do, the central banks, when they want to stop Bitcoin? And I thought, they're probably going to wait till there's a financial crash, and then they'll create this huge story like Iraq, right? Weapons of mass destruction. They'll create this huge story, and they'll say, right, whoa, who can we blame? Bitcoin. It was Bitcoin that caused the financial crash. And they'll find some tiny thing on a long wild goose chase, and they'll be like, that was it. And people will go, okay, well, that's it. You know, the majority, a lot of people, they're not awake. They're not thinking. And they'll just buy into it, just like a lot of other things.
Well, if you want to see that whole scenario played out, I did a talk specifically about that called Currency Wars, which happened in 2016. It presaged a lot of the things we're seeing today, and it ended up on a verse of, "We didn't start the fire. It was always burning since the world's been turning," because they will blame us for starting the fire. And it will be a lie, of course, but some people will fall for lies, even if they're obvious. The important thing is that as people who work in technology and as people who work in finance, we have a responsibility. Now, that responsibility is broader than just our national responsibility. It's a responsibility to the whole of humanity. And if we have a technology and invention that can give people the ability to control their own future, to have access to money, to engage with others internationally, to bring them freedom of association, freedom of expression, freedom of political expression, freedom of commerce, free trade, etc. We have a moral obligation to pursue that. And it doesn't matter how uncomfortable it makes people whose power is disrupted by these technologies. We're not going to stop progress just to protect somebody's business model or even somebody's national business model.
Great. So Andreas, that was fantastic. I really appreciate that. I think they're the main questions that come across in the comments all the time on the channel. I think the last thing I really want to go over with you to wrap this all up is to really get people wise on crypto, on Bitcoin. So many people comment and they say to me, or they try and book in sessions with me, mentoring things, say, I've lost all this money on Bitcoin, I was ripped off here, you know, things like this. Let's talk about how people can get Bitcoin, how they can use it. What's your advice on it, and how can they avoid getting taken in by these, you know, charlatans, as it were?
Yes. So that's a great question. And, you know, I always advise people to be very, very careful about this. And of course, to temper their investment by their degree of confidence and knowledge in their technical understanding of this technology, which means at first you start very, very small and very, very timid, as you should, because this is new. And it's different and things can go wrong. Just like the first foray you had on the internet, you know, there were a few dangers lurking out there. The same thing applies here. This is internet money after all. So the first thing to remember is just because this is a new technology doesn't mean that any of the old rules don't apply. If you hear something that is too good to be true, it's too good to be true. It's not true. If you hear somebody promising you a specific return on investment on a weekly basis, or they suggest they'll take your money and invest it wisely and give you fantastical returns, or they're giving away free cash on the internet during a video presentation if only you send them a bit of yours and you get more back, or they suggest that you should park your money in their systems. All of these things are scams. There are no magical jobs that make you money this way that don't make you money another way. So go into this assuming that just like answering an ad on Craigslist, you may be about to walk into a scam. Be careful, do your research, use reputable sources for your information. Now, most people think about this and they go, do I buy? Do I invest? How do I buy? And I will flip it around and say, first of all, think of this as earning, not buying. We all have some kind of skill that we offer the world through our labor, or we make a product, or we do some kind of service, whether it's cutting hair or mowing lawns or fixing cars or whatever it might be. If you're in the technology space, those skills can relatively easily be provided in exchange for Bitcoin. There's a lot of technology companies that will pay Bitcoin for contractor work. I do all the time. So that's easy. If you're not in the technology space, it's a bit more difficult, but lots of people have been able to sell all kinds of things for Bitcoin and all kinds of services for Bitcoin. So just like you wouldn't buy dollars, but earn them instead, you shouldn't think about buying Bitcoin, but earning them first. Now, if that's not working for you, or you want to try something else, you can use either a reputable exchange to exchange fiat currency or dollars to Bitcoin, or you can use an ATM, which will cost you quite a bit more. There are Bitcoin ATMs scattered all around the country where you'll pay a 10 to 25% premium, which in Bitcoin volatility means 3 days, or it might. So you can put cash in a machine and it will basically send Bitcoin to your smartphone. In all of these scenarios, one of the things to remember is that Bitcoin is a system of control where you should control your own keys. You should control your own wallet. And I have a phrase that explains that, which is not your keys, not your coins. If you don't control the keys and it's held by someone else in a custodial account, the risks of them freezing, seizing, or stealing, or having stolen that currency are pretty high. So it's often good to think about, once you acquire Bitcoin, how do you move it into your control, so that you can really truly get the benefits of financial sovereignty that come from this mechanism of individualized and decentralized control. And whether that's installing a wallet on your smartphone that gives you control of your own keys, etc. With that comes some responsibility. You have to do your backups. If you lose it, you're in trouble. You've lost your money. And then think about how this fits into your broader financial situation. Just like any portfolio investment or part of your net worth, you should see how much risk you want to introduce to your portfolio. And for everyone who says it's very risky to own Bitcoin, I would turn around and say it's even more risky to only own dollars. Right now, everything you own, everything you do, and everything you earn is denominated in dollars, which exposes you to some pretty significant risk from that single source. You don't have to do much to diversify it even a tiny bit.
Yeah, definitely. So what would you say? I mean, let's take any bias out the way, as I have to do, because I'm a real estate guy. I have to take bias out when people are asking me this question. What percentage, and I know it's on a case-by-case basis, but if you were to just give an average figure, what percentage would you say that it may be a good idea to hold Bitcoin in your portfolio? And of course, it depends if someone's a billionaire or if they've got a couple $1,000s, but can you just talk into that?
I would grade that percentage based on your level of comfort with technology. I wouldn't start with anything larger than 5%. And I would start for younger people who are, in a higher risk category, who can take on more risk, really. I would look at taking some disposable income or substituting a bad habit, one less Frappuccino a week, quitting smoking, and then using Bitcoin as a little incentive savings account. So you're like, okay, I'm quitting smoking on Monday, and I'm going to put the same amount that I put into packs of cigarettes into a dollar cost averaged Bitcoin account as a little savings gift for myself that I plan to spend in 3 years to reward myself for quitting that. You could do that with a variety of things. That gets you into a mentality of putting a small amount each week, dollar cost averaging, so you're not worried about timing the market. And generally, I would keep it under 10%. For anything but the most sophisticated investors who really, really understand this technology. And that's across your entire portfolio.
Yeah.
And I don't have, 100% of my worth in cryptocurrency. Absolutely not. I have other diversified strategies. It's a much bigger percentage than that because I'm in that field
Yeah.
and I understand the technology really well, and I'm willing to take the risk. But for most people, yeah, 5 to 10% sounds like a good upper limit for comfort.
Yeah. Okay. Good. I'm glad you said that.
How do you feel about that percentage?
Yeah. I mean, for me, I look at investing. I prefer to invest in returning assets. So I'm heavy in real estate. I'm not heavy in stocks right now because I'm not convinced right now in the stock market. So I have stocks, but I'm only holding strong stocks, right? But I know I get dividends. I know I get returns. I know eventually, you see, I'm a long-term investor. I don't speculate. I don't trade. I don't do any of that. When people tell me they do that, I say, good luck to you. But, if people like Ray Dalio say, you can't compete with his machines, even the smartest genius in the world, why would I try and do it? Or why would other people?
Yeah, I'm with you on that. Like 5 trades a year is already woo for me. But the bottom line is right now I can tell you that because I've moved since January into more liquid positions, kind of put together some cash reserves to ensure that my business can survive the economic recession, supply chain disruption that was happening in China even before the pandemic. Then I look at that percentage of cash, which is already a non-returning investment, a non-passive income investment, and thinking how much of that do I keep in crypto? So again, it varies quite a lot, but of course, real estate, precious metals, and other things. It's about trying to have a diversified portfolio. One of the nice things about cryptocurrency is that it adds a dimension of diversification that's not quite available in other asset types. And that is that it's a fairly contrarian investment compared to all of the traditional financial instruments, which at times has shown to be counter-correlated. At other times, it's loosely uncorrelated or marginally correlated, and that can give you something different. It's one of the things I find from my perspective is finding things that are not lockstep correlated to the Fed put has become harder and harder and harder over the past 10 years.
Yeah. Right, so Andreas, just want to say finally, thank you so much for coming on the show today. I'm sure you've resolved a lot of confusion that exists in people's minds, a lot of conflict, and just a lot of people just don't understand Bitcoin and crypto. So I really feel that this conversation has resolved a lot of that. I just think you've probably given a lot of peace of mind to a lot of people. So thank you so much for coming on the show. And for everybody watching who wants to know more about Andreas, you can visit his YouTube channel. I was just on it earlier today. He's got over 200,000 subs. So he must be doing something pretty good to have that level. I'd definitely go and check out his videos. He also has books, Mastering Bitcoin, several best-selling books. So I'd recommend if you want to learn more from Andreas, do that. He also has a Patreon as well if you want to get more in depth with him. So apart from that, thank you so much for being on the show, Andreas. We really appreciate you.
All the best, Neil. Thank you.